Attention to the neglected and underserved community of investors. There is an alternative real estate investment opportunity for the average person. Money is only a tool that gets its power and value from the people who know how to properly use it. For decades, it has been about high net worth individuals and institutions. People need a real financial vehicle so they can be represented within the Wall Street ecosystem that is for the people, by the people, and of the people. Introducing the power of co-oponomics. Consumer Cooperative Group is committed to revealing the power that the lower and middle class investors have already possessed by redirecting it through co-oponomics. By taking the neglected and underserved market of retail investors, introducing them to Consumer Cooperative Group's journey and process from pre-IPO to a listed and publicly traded company using the crowdfunding method under the Jobs Act, this funding method will eliminate the need and burden of entertaining the traditional venture capital dog and pony show as well as other financial intermediaries. People have been funding things that have been controlling their lives instead of funding things that will allow them to control their own lives. To learn more or to get started as an investor today, visit Consumer Cooperative Group at ccg.coop. That's ccg.coop. Early investments are now open.
Universe. Media. Network. 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 Network.
This is Antonio Holman, publisher of United States Real Estate Investor, and welcome to another exciting episode of Features, where I have in-depth conversations with people who make this industry so exciting. Today I'm talking to Tanen Andrews, who is the founder of Consumer Cooperative Group, something really exciting for underserved and underrepresented people in the United States. Tanen has built something really incredible and has been working on this for quite a long time, roughly about 25 years or so. And I think this is an extremely exciting venture that he's creating, and I hope you will too. Please sit back and enjoy this in-depth, very detailed conversation with Tanen Andrews. All right, so we're here today with Mr. Tanen Andrews, who he's developing something pretty amazing for a lot of underserved communities here in the real estate investing space. But before we get started here, Tanen, let's get into a little bit of what your personal life is like.
Oh man. It's kind of tricky. It's a lot of things going on, man. Teaching the kids, man. I homeschooled the kids, teaching them, bringing them up on business, not having the traditional ways of saying, hey, I'm gonna go to college and then I'm gonna go find a job. And like, no, you're gonna go to college, you're gonna start a business. So a lot of that goes on in the household and stuff like that. So all my kids are grown now. They're all adults now. The last one just turned 18 in June, and then my 20-year-old just had his 20th birthday yesterday. So yeah, it's kind of tricky balancing the family life and trying to run a business over the past 20 plus years. Yeah, it's been kind of ups and downs in there, like with the misses and all that.
So did you get any pushback from the kids when you were aiming them towards business ownership instead of working for somebody else?
Well, not the last two. My first couple, they're kind of little knuckleheads a little bit. Like I got two older sons. One's a college graduate already, and the other ones, the two are just floating out there. And I have a stepson, so that makes that six. So I have a stepson. Yeah, he just went into the military. So those are the type of things that we tried to explain to him, beforehand. But he got caught up in the situation. And now he says, "Okay, I got to go do this." So I said, "Well, that's the path you should have took before." But like I said, they got to go out there. They're gonna bump their heads and trying to figure out what's going on, and they just got to realize this is work. It doesn't matter what you aim and put your what you want to do. It's going to always require some type of work and some type of mastery over time. So
okay, Tanen, briefly tell us What is Consumer Cooperative Group, and what is what you call co-oponomics?
Well, Consumer Cooperative Group is a cooperative, and I think traditionally, I think a lot of companies, a lot of people are brought up in thinking, hey, incorporation. Well, some, because I got a little story on that one. You know, incorporate, get an LLC and whatnot. But one of the things what they've not been putting out there is what a cooperative is. And a cooperative is the original form of an entity that was in place previously before there was any type of incorporations, any LLCs or whatnot. And what a cooperative is where you take members of the communities that have different maybe products or services and stuff, and they pool their capital resources together to provide those resources to everyone within the community. So, and that's the sustainability. So when corporations came in, corporations kind of took the place of that, and cooperatives kind of just slid to the back, to the back end of it, but they're still there, but they're not forming. Because I know if you heard of a anything that says cooperative, collective, or like they're usually are associated with utilities or credit unions. But at the same time, uh, they're functioning in that capacity, but not in the capacity as the original form of what a cooperative is supposed to do. Because the cooperative is like the bank. It's like, hey, we need to say for instance, a farmers cooperative. That's another form that they were using. So if you have a certain farmer has a certain crop and another one has another type of crop, they would take uh, one crop and they would exchange. That would be their specific currency at that particular time, and that's pretty much how the communities sustain themselves. So now, what co-oponomics is, it is cooperative plus economics. Put that together, that's what you got, co-oponomics, and that's what we need to get back to. We need to get back to the origination, to the original way of doing business amongst ourselves, and so we have to stop delegating our authority and power over to third party intermediaries where they're controlling the outcome of what is being provided to the communities. They're kind of like they're creating scarcity in places that don't need to be scarcity there. They're manipulating the this inflation that's being created. We had a meeting on we had a video on Friday where I talked about I started the my series, knowing the ledger, the power of bookkeeping entries, which is what is money. That was the first episode. So we went over that, how all of that takes that process of money creation and all that, and how that takes place, and what creates this disconnect between what is money, what are we using for money, what do we consider money, and how we're trading our personal time and our labor for money, when it should be the assets should be producing the capital and the money for us and not us. Because I think that's where a lot of um, uh, the issues are. People don't have enough time in the day to do certain things, to be with the loved ones, take vacations, do certain things, and you got all these like gurus and all these things on the media just shooting at them saying, hey, I can make you rich and I can do this and stuff. But people don't have that foundational knowledge regarding what money is, and time and money, opportunity costs, all these different elements. So what co-oponomics is trying to do is trying to bridge that gap, bring it back to the original, bring it back to the point to where we're educating the people first. It's like, hey, look, this can be done, but let's learn this first here. We have to learn the concept of what money is. So when we move through our process, you'll start to understand what's taking place as we're moving along, so then you can understand, hey, yeah, there, I see what the change is. Okay, now you have to see what people want to change. When you say you want to change something, people, the only way for people to change something is they have to understand what they're changing from. You have to give them something, uh, an alternative, because you can't produce something to somebody and then you don't give them an alternative, and you have to explain what that alternative is, because remember, they've been conditioned over the course of their generations, many generations. They've been conditioned to think a certain way. So when you come with something that's completely, you know, different, but it's concrete at the same time, and then you show where the connections is and where the manipulation is taking place, then you give them a foundation where they can start from, you know.
So the other thing that's interesting about what you're doing, on the surface, most people would say that this sounds like a real estate investment trust to me. What is the difference between that and what you're doing?
Well, the real estate trust, again, there we go. We have to start defining words. We have to start, um, understanding the definitions of words. And a trust is a one of those, financial business entities that are started, uh, to protect assets and, separate people, separate themselves from an entity. So, so the first thing I would have to say on that is, okay, what is a trust? A trust is an instrument or a vehicle that, holds and protects assets. So that means you would have to have three parties to that. You would have to have a trustor, a trustee, and a beneficiary. Now, within that trust, it has to have assets in it. So yeah, they're similar, but at the same time, the difference is that the cooperative, we're pooling funds together as a group. And when we do that, what happens is that now we want to acquire, in our situation, we want to acquire multiple, several million, hundreds of $1 million worth of real estate. So if we pool our funds together, that capital that comes in exchange for that capital, they receive stock, okay, equity stock. So that would be the exchange there. Now, the benefit from that is now they don't own the real estate, they own it indirectly through that piece of stock. Now, that stock can act like a derivative, and a derivative is something that's different from, something that's in lieu of or place of the actual asset. So they're exchanging an asset for an asset. You see, now a trust is just pretty much saying, hey, a trustee, you have a third party intermediary, which is the trustee. He has a fiduciary duty, to administer that trust for the benefit of the beneficiary. You see what I mean? So now the beneficiary is at the beck and call of the trustee. The trustee can run it. He's like the manager. He can do whatever he wants, and the beneficiary has to comply with whatever rules the trustor set up for that trust. They pretty much have to abide. The trustee has to abide by those rules and administer the trust for that, and the beneficiary has no control. The cooperative is completely different. That stock, once the members or the investor has that stock, they have the ability to do whatever they want. They don't need to come to me or, the CEO or whatever, the founder or whatever, and ask, hey, I need my money. But we're creating an environment to where, hey, we're going to register these shares, we're going to make them liquid, so that way people have access, to their investment, uh, benefits. You know what I mean? So the benefits of holding stock, and I don't think people really understand what the benefits of stock is, other than from what they have their 401ks. You know what I mean? So if they have their 401ks, they pretty much, from their job, they pretty much have a third party uh, administering their account. You know what I mean? They're taking money out of their check, and then they're picking and choosing what companies or what stock that it's going into. So it's like, there's not really any control. And then if you want to pull your money out, then guess what? There go the fees. They're gonna hit you with your fees on your money. So that's the disconnect right there. So, and I think with the new legislation that came in with the Jobs Act, being able to where regular individuals can directly participate with startups and get stock at a hell of a discount versus going before it gets to the retail market is a big advantage for them on that. But we have to educate them and let them know, hey, this is what stock is, this is what it is, and I think we'll get into into that process where we're talking about the manufacturing, the wholesale market and the retail market, and in that supply chain. And people have to figure out what section of that supply chain do they want to interject their capital into. What part of that do they want to be in the manufacturing stage, they want to be at the wholesale stage, or they want to invest their capital at the retail stage, because there's different levels. And they understand it, but I don't think they've seen it applied to the financial world. But if you go into the consumer world, they understand the concept of manufacturing, wholesale, and retail, because they're buying clothes at retail, right? And then they're waiting for it to go on sale. You know what I mean? So they understand that concept. So now we have to apply that to the finance market, and how that they need to be able to stack their assets. And it's all about asset classes, and there's more than one. Real estate is not even though this cooperative is real estate, but it's also building additional asset classes, and it's also converting them from what they call a non-accredited investor into the accredited investor. So the process of co-opinomics is to change individuals' asset holdings, as well as their classification in commerce, from non-accredited investor to accredited investor, because that opens up other opportunities. Because people are thinking, we have a lower class, we have a middle class, and we got an upper class, right? But there's only two classes: non-accredited, and accredited. That's right. Because the accredited gets all the opportunities to do certain things to build assets. That building those assets also builds wealth, and it also maintains that wealth as well at the same time. And maintaining that wealth is basically from making your investors sustainable. If you make your investors sustainable, and what I mean by making them sustainable is that when they give you capital, you have to give them something in value is equal or more. Because what you're doing is the sustainability comes in, because if you're taking care of the investor and your investors and your members of the co-op, what happens is that they're sustainable. They can pay for the services, they can invest, and that sustains and keeps the company going. And then from there, it's just a revolving door. Whatever the company creates and profits from, because what we do is we split profits 50-50. Because we look at all our members and investors as equity, as JV partners, in a sense, right? So whatever comes in and whatever goes back out is split 50-50 between the company and how many, depending on how many shares that each individual takes advantage of, their earnings will be based on their per share holding. So.
All right, Tanen, so you've been doing this for approximately 25 years. You've been developing this organization for about 25 years. So what is your business background that led you to the creation of Consumer Cooperative Group?
Mainly it's business, business school, entrepreneur school. It's a lot of variety of things. Not just that, but actually I think my unique approach to it is based on personal experience. Um, I always dive in head first. I don't question myself when I do stuff. I go in, that consequence. If it's not right, I deal with the consequence. Hey, I don't look at it as a consequence. I just look at it, I just built another step. So once I build that step, I know, I don't take that route anymore. And I say, okay, now it perfects it. But like I said, I was fortunate enough to have a mentor, early on that didn't charge me. You know what I mean? Because you got a lot of these people out here today hollering about, hey, this costs X amount of dollars and da 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 to do this, and information should just pretty much be free. And that's what he did. He gave me the information. He gave me the knowledge. He said, now I'll point you in that direction. It's up to you to do what you need to do. And that's pretty much what I did. He gave me what I needed. I went to that and I found out some stuff. I had some questions. Then come back and I said, hey, I ran into this. Okay, now go here, look this way. So he was letting me trail my own path, and as I was coming up to certain situations, then he would help me, guide me to another path. So a lot of the practical experiences dealing with real estate from the foundation of it. Um, yeah, there was no specific technique. I just learned the rules and procedure. Just like in math and algebra, you have, if you have to figure out and try to solve a problem, every problem in algebra has some form of formula. So business is the same way. They have different formulas that you use and calculation that you would do to create a deal and do whatnot. So when I did the deals were just pretty much in the sense of just based on that scenario, uh, working the numbers, a lot of creative financing at the beginning. So that's the foundation of it. I was created from creative finances from the get go. You know what I mean?
Yeah.
Try to you have to tailor the deal to make it work for you. You can't just take somebody else to say, hey, you can do this and you can do that. And I'm like, no, you can't take what someone else does, because their results and their situations is completely different from what you may experience, because your experience is not probably, and confidence is not probably as confident as the person who's teaching you that technique. So you got to kind of feel it out yourself and kind of go with the flow, because sellers, you got different type of sellers and stuff like that, different type of, and that's what we were talking about earlier, the personalities. If you don't know those you have to learn those personalities so you're able to adapt. And that's pretty much all real estate is creative financing, adapting to the situation. um, uh, and then back then we're learning about lender programs. You know, lender programs, they come and they go, right? Some of the programs that I had back in the 90s, those programs are now back. They're coming back a third time. So since I started in the late 90s, right? Those same programs, them zero down programs, all of them, they'd have made an appearance about 3 or 4 times since I started, up until this date. And those programs are back now. So it's it's just like, but now what happened is the background of it. It was the having finding out certain things, about the concept of money and what the banks are doing. Are they really loaning money? All of those things started to come into play because of different people that you're meeting. You know what I mean? You're dealing with uh, some of my knowledge and foundation comes from, like I said, it all comes from practical. It's nothing that I do is theoretical, because theory, you should know, theory is something that is unproven, right? So everything that I teach and everything that I show is all based off practical knowledge, practical experience, and what they call folk knowledge. So I'm taking folk knowledge and I'm passing it down from generation to generation, whether it be through my line of generations or someone else's line of generations, so to help us change a lot of things. So a lot of knowledge, again, like I said, when I say it's passed down, a lot of the knowledge I have, not just from my mentor, but I've had knowledge coming from attorneys. I've had knowledge coming from judges. I've had the knowledge coming from bankers. So a lot of so taking that and them pointing me in those direction and me saying certain things to them and teaching them certain things as well at the same time, that helped me develop uh, for help me develop my technique, uh, my learning patterns, and my teaching patterns on how to teach people. And I think that I can teach people real good because I can take it down. I know how to take myself from a leader position and subordinate myself down to a follower and let someone else lead. You see what I mean? Because that's a confidence builder for a lot of individuals and stuff. They have a perspective, and you have to let them shine with that perspective. And sometimes you have to step back. So I try to be a leader creator at the same time. So that's pretty much the background of what I've established and what I'm doing in the business. And it's not just, you just can't just focus on the real estate. And I think that's where a lot of people lose it when they see this on TV. They're like, well, people like, hey, hey, we're gonna make you all this money and we're gonna do all this and stuff like that. But you're not giving them the foundational, uh the conversation. Let's have this conversation. Let's sit down. Let's project. You know what I mean? Let's project some things. Let's plan out the scenario and stuff like that. And that's something that that background that I've established over that foundation, along with the schooling. You know what I mean? So, holding, well, I don't hold my master's yet. I'm only a couple classes away from two masters. A matter of fact, my master's in business and my master's in entrepreneurship. With the So it's kind of been difficult, trying to run the business and finish those last few little classes, but at the same time, I'm completing those classes while I'm actually experiencing. Because people go to school to get the knowledge, and then when they get out of school, they go and get the experience. But I don't think anybody's there to actually sat there and thought about, hey, no, I went and got the experience first, and then I brought that experience to class. So I brought something of substance to class that's the class has never heard of, and the professors has never heard of. So I had a lot of professors, communicated with me more, and I think more than the other students and stuff, because they were trying to learn what I was learning, because it was like, well, no, it makes a whole lot of sense, especially that's when I teach as well, is I make sure I cite my work. You know what I mean?
Yeah.
And that's one of the things that I learned in school. See, school will give you certain bits and pieces that the streets won't give you. You see, so you go to the school teacher will, no, cite your work. That gives it authority. I'm like, oh, you see what I mean? You don't get that from the streets, right?
Yeah.
You know what I'm saying? You don't get that from the streets. So when I